morning, good afternoon, good evening, everybody. It is Inauguration Day, Martin Luther King Day. Stock market is closed day, Monday, so it's a long weekend, and Trump is in. Get ready because it is all going to get started. Trump, let me just remind you here, okay? Trump is not running for re-election. Couldn't give two shits about paving the way for JD Vance. So there is a fuck ton of A, revenge that's coming, and B, fuck everything that is not red, white, and blue United States. He is going to make America primary, and that is going to cost because, like what you're seeing here today, looking here at the futures, futures a little bit weak, just a little bit weak as we came out there after the little sell-off on there on Friday. A little bit of a upside there in the European markets. Again, markets are closed, and then we started sinking down as the sun started rising over there on the East Coast in the U.S. And that candle right there came right at, you got your headline, 8:30 in the morning. Trump to lay out trade vision but won't impose new tariffs yet. And the headline came out to be verified about an hour later, where he was saying Trump official confirms to the Wall Street Journal, who has been known to post bullshit. It's been done 3 times already, just under Trump. He'll stop short of imposing day one tariffs, meaning today. So the shit's going to hit the fan, boys and girls. Trump official confirms earlier report that he won't impose day one tariffs. So get ready. Buckle up, Buttercup. Just going to remind you while we're on the page over here, which is Financial Juice, best website that you could ever want. Have your little tick strike over here so you can listen to the market. Have your audio commentary so you can listen to pertinent news. This is a very slow week, an exceptionally slow week. There is absolutely nothing taking place this week. And I want to remind you, the FOMC meeting is next week. Big tech starts to report next week. So we're in the middle zone here. And the only thing that we do have coming up is late, very, very late Thursday evening, which is the Bank of Japan, who is expected to be raising rates on Thursday night. So that would be Friday morning. But again, there's nothing for headlines as we go in this week. As far as earnings go, you got Netflix tomorrow after the close. Other than Netflix, there's nothing taking place. Nothing. I'm not saying these companies are worthless or they're useless. Some of you might follow them. Some of you might own them. There's nothing of here of any kind of great value that will have any kind of impact on the indexes. QQQ, SPX, SPY, IWM, nothing. So let's get a little recap here. We go back here on Monday, and Monday how we started out with, looking at the week. We're looking to bottom at 57.82. We bottomed right at 57.82. Bam. That's where we opened. Took that little dip in the open, as you know, closed green on the day. Going here to Friday, how we ended the week. And as I pinpoint laid out for you there, Crush the VIX Friday set up, da-da-da-da-da. Your range, 59.31, 6009 over there on the SPX is what your range is going to be for today. And your risk trade. Your risk trade is after 59.75, shows, and 6009 is pushed for, and you have your buy the 60.15 calls, sell the 60.10 calls for $2 plus. Well, as you all know, you got your $2.50 as we spiked up there to 60.14.96 and rolled it on down into the end of the day. And I want to make you note here that you closed up 1 point above where we opened after that big gap up. You had a 214-point range. You still have a 247.73, call it 248 points for the month. 4 gap ups in a row. As you can tell, the momentum has shifted. Even though we were gapping up all year, we've gapped up virtually every day this year, other than there on January 10th, the Friday, and here on January 13th, last week Monday. We have gapped up every single trading session. So seeing the futures be up today doesn't really mean anything. All it means is that the futures are up. But yeah, over here on your spreads and the way that this year has worked out, I mean, come on. It's just been absolutely spectacular. Really has. On to your QQQ, which is where it gets interesting as well. You had a green week. Again, you're up 20 points on the week, but I want you to take note here how you closed below the open on Friday, even though you're up 2% on the day. Not saying that it's showing weakness, but it did come right up to that 524, which was the beginning point for getting into those March QQQ puts, which you saw. I already had an order out. My order got filled very early in the morning. We still closed right around that same area. Over on the IWM, green week. Fantastic. Right up to that 227, kissed it and said, bye-bye, sayonara. Kissed it right off of that. And again, closed red below the open, although you do have 5 green closes in a row. Buckle up, Buttercup, because you have hit resistance, and you have hit it quite hard. Up 11 points for the week. Again, 13-point range, 11-point, 12-point range the week prior. Great volatility that's taking place over here on the IWM. One trading session, one, did not go plus or minus 1%. One. So with all of this done, talking here again about what's going on over here with the earnings, where there isn't really much there, I will now dig into giving you a brief discussion about where this is, which, as you can see, it is starting to come down. We are starting to push to that 60-36, 60-30. 50-day moving average being down here at 6,007, starting to make a move. Tariff comments are going to be important. I bring you on then to the year chart. So let me get you started here, and boom. SPX. Last week. This is my personal detailed chart. And somebody will look at this and go, yeah, but you got lines everywhere. That's why you can always figure out where the fuck we're going. Well, I got these fucking line here for a purpose, and as you can see, it is fucking ping pong on these lines. Started out here 57.73 after opening at 57.82 on Monday, and poof, right on up there, right above 6,009, and a tiny little cruise down below it to close right there at 599,666. 8675309. So anyway, well above the 50-day moving average, sitting here at 59.67. Your 20-day moving average at 59.24, which is definitely going to be moving to the upside, along with your 10 and 5-day moving averages. And the way that the algorithm works, the way the video game plays, is when we do get our dip, it will be touching one of these lines. And after it touches that line, that will be the support level. After that touch gets worked, and it's going to take an enormous amount of work, it will be the next one. And with the 5-day and 10-day moving upward, we're going to be looking at this gap being filled, this 59.35. That's what I'm looking at for this week. That's all I'm looking for this week, is for this gap to be filled, 59.35. And my personal expectations are it's going to happen sooner rather than later. Come on over onto the wave count, and with this being a little bit too much for most people, I'll put you onto a 10-day. 10-day, 15-minute. Oh, Trump is going off now. He's going off. So 60.21 being your high of the month, back here on January 6th, we have gone up into that unfilled gap, that 60.21, 60.38. We've gone up into that here overnight, right after that headline came out with the Wall Street Journal. From the structure of this, as it bottomed out and came perfectly down to that 57.82, boom, boom, I've got an A, a B, 1, 2, 1, 2, 3, 4, 5, I can see, and this being a C equals 2. Can look at it as well being a 1, 2, 3, 4, 5. Either way it is viewed, this undoubtedly looks to be complete. And the only question is whether this is the A wave of wave B, and we're due to get a dip, and then another move to the upside before this wave B completes. Will be very difficult because you're not far from the all-time highs. Or if this is all of wave B, this move that we have had, which now, overnight, you have retraced 76.4 of the entire drop from back on December 6th. The one thing, and again, this is one thing that has to be left on the table, is that this is all of wave 4, this big wave 4 right here. I'll make it even bigger so that it can be seen. This is the wave 4. It's all of wave 4, and wave 4 is complete. And this is wave 1. No matter what, wave 1, wave A of B, wave B, we're due to get a dip. Where that dip dips is what will determine where we are from a bigger, broader wave structure. But again, nothing has changed whatsoever. Everything is still on pace, which is why, again, I went for the 4th time and took those QQQ puts. Come on to QQQ. Looking at your big drop all the way down there to that 499.61 last week. Much cleaner here as an ABC. Much cleaner. Could be your 1, 2, 3. Could be. You've got a very large gap to be filled down here below, and you are touching onto that 524, which was my first alarm. Come on to the bigger, broader view, and again, where you would love to get an entry to get short would be around that 528.61. That's what you would love. Tiny little gap there to be filled. But again, from a blind, just a blind squirrel trying to get a nut kind of view, you can see right where you are as far as this channel goes. And we had a little pop up above it on there on Friday. Again, nothing to go jumping around and changing any kind of decision making just because of where we are from Friday. Bigger, broader, wider view, and this is where you're sitting here on your QQQ, which I've been asked about quite a few times. Your COVID bottom, 164.93, your top there in 2022, your bottom there in 2022, A, B, 1, 2. Regardless, either way what they are, we are up here at wave 3 or all of wave C. Yes, you can be bearish and still be going higher. Where we are from a structure point of view, we're up 105% from the 2022 lows. Or is that from here? I don't remember. Yes, it is the 2022 lows. We're up 216% from the COVID lows. And what you have here in red, just so you can see, are your unfilled gaps. And unfortunately, whether you like it or not, all gaps get filled. All of them get filled. It's just a question of when. And when you start looking at this and you start understanding the way that the game works, you start to appreciate some of the commentary that has been shared by Sem Karsan, who is talking the same thing that I have been discussing for the better part of 6 months. After we got that volatility here in August, the big drop down there from July into the August bottom, this is where we should have had a very bullish correction to the downside prior to the election. We did not get that. First time in my lifetime, 50 years, we didn't get it. So it's made this situation worse. It is compounded onto this problem. And it's going to take a miracle to get you out of this. You've had that already shared with you. Come on to the IWM, and again, here on the IWM, here's your 227. Your 227, and bam, your rejection right off of it. Right when you opened up there on Friday. It was absolutely incredible. We'd have to take all these drawings off, remove your studies. Right there, right at the opening bell, 227, bam! Sell right off. Show you here on a wider view what we're talking about with 227, and there is your 227. 227 going back here to, what is this, July. Boom. This was an FOMC, if I remember. 227, bam. 227, bam. 227, bam. 227, bam. Trump wins the election. Paboof! Through 227. Where'd you come down to? Came down to 227. You bounced off of it. And then you faded off for weeks and days and days and weeks and days and hours, all down here, right down to get down just that little tiny dip below 220. And here we are back at 227. 227, 227, 227, IWM 227. You need Oprah Winfrey to bring you on on show and have everybody give fucking free cars and invite you to a Quincy Jones party in order for you to get 227 and get some of that P. Diddy lube to get you through 227. It ain't happening. Again, here on the ES, what I was sharing earlier is here's your channel coming off of your highs. What I have done is I went there and I took out all the aftermarket trading so that you could see where your gaps are. And this is your gap here on the SPX that we talk about, your 60.17, 60.38. We pierced right up into it over here overnight. Donald Trump has just finished speaking right now as we're doing this. And again, I still see this as a 1, 2, 3, 4, 5 to the upside. So bullish, bearish, doesn't matter. We're due a dip. And where we dip will determine whether this is bullish or bearish. Again, here on your VIX. VIX, we got that total collapse on the VIX going back last week after CPI. And here we have been trotting right around 1622. You had your standard run-of-the-mill Monday morning gapped up, and then right here after you got your Wall Street Journal headline, your little sell down. So there's an enormous amount of room, there's an enormous amount of space to drop the VIX and bring it down below 14, bring it down below 13, start pushing into the high 12s. But they're not. It's not getting shoved down. And that's a little bit of a question. That's a little bit of a question when it comes to being uber bullish with everything. And then you come over here to your US dollar because, again, what Joe Biden and Kamala Harris have provided, what they have provided, as you saw Janet Yellen with her final post as U.S. Treasury over the weekend after the market closed on Friday, is the U.S. is going to be hitting the debt ceiling tomorrow. Your U.S. dollar, the DXY, is ready to explode. This is terrible for the stock market. But the stock market is avoiding everything for right now. And again, bring you in here into a zoomed in kind of view. Remove our study so we can see this. And here you are. Trump will not be imposing day one tariffs. Splat. And the DXY has completely recovered. There's a bigger, broader story to everything that's going on out there. And it is not what you're going to be seeing in the headlines. It's all going to be in your charts. So anyway, I will bring you on again just to a dummied down version with a little bit of pizzazz on it with the SPX. And as you can see here on the daily on the SPX, as we knew that we were going to get our bounce no matter what with the big buy divergence we had on the daily, we're just now embarking into overbought. So couple of points to the upside that we've got. SPX coming up here to that 60.37, 60.37, 60.21. That's your gap right there. Goes back to December 26th. Look at your red days. Look at your red days here. Red, 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 red. Your big green day was CPI. Even though you're gapping up, you're selling off all your gap ups. That is a perfect way to play call credit spreads. And that's what we're set up for. So I'll get an email out to you tomorrow prior to the opening bell. Tonight is going to be very interesting with all the headlines that will be coming out from Trump. Where are we right now? We're at 60.16.90. So we're just outside of that gap. That's 60.21, 60.38. And one last thing I had to share is, here. You got your full moon on January 13th. Gotta love it. Your new moon is on January 29th, the exact same day as the FOMC meeting has concluded and your major tech stocks start reporting. Enjoy your or not Sunday. Enjoy your Monday. Enjoy all of the news about Donald Trump and everything going on tonight. And most importantly, get ready because we have entered into a new era, a new market, a new algorithm.
That's all, folks.